Welcome back. We've been discussing a CRISIL report which shows that there is a steady march of India's savings from the traditional bank deposit to managed investments like mutual funds, insurance, AIFs, pension funds, etc. I've been speaking with Professor Tarun Ramadurai of Imperial College London and Dr. Pranab Sen, the former chairman of the Statistics Commission. Dr. Sen and Tarun, thank you very much for waiting by. Dr. Sen, like I was saying, the broader question, the savings trend is not picking up. Of course, it is unfair to look at FY21 because it was a very unfortunate year and savings rate fell to 28.2. But it has been falling for the past decade. Do you see that as an ongoing affliction, or do you see it turning now that perhaps growth is on a firmer footing?
That's difficult to say, Lata. I mean, it's actually one of the puzzles of Indian development in recent years to actually explain exactly what's going on. You know, in economics, we always believed that the higher income bracket a person was in, the higher would be his or her savings rate. And what we do know is over the past few years, the income distribution in India has been turning more and more in favor of the rich, which should have led to an increase in savings, but it isn't. And the question is why? And I'm not sure we still have the answers to that question. I certainly don't.
Okay. Tarun, what's your sense? I mean, we have seen this trend fall in savings. Even if we don't take the unfortunate FY21 data, we don't yet have FY22 data, but even if you take the data before, there is a very clear fall off from the first decade of the current century. Is that something that can turn now that a lot of things are working in favor of India, fastest growing economy and all that?
Yeah, I mean, I think Dr. Sen was correct that in our standard models, we sort of have a tendency to believe that the propensity to consume out of income declines as income rises. In other words, that you might expect that when people become richer, there's a larger fraction that's allocated to savings. That doesn't seem to be the case. It does seem like it's bucking the trend. I will say that if you take 2020-21 out of the equation, though, it's not entirely clear to me. I mean, yes, there was a fall in 2019-2020, but I think the jury is still out a little bit on that. It was a very unusual year that we've obviously been through with the pandemic and everything. So I suppose I'm going to reserve judgment on whether we really understand that gross savings has indeed declined until I see the data from the recent period. I will say one other thing, which is even with a declining savings rate, it is possible to get improvements if the efficiency with which the savings are allocated is increasing. So even with a smaller savings rate, you can deploy it more effectively if it is channeled to the appropriate uses.
Okay. Yeah, that is exactly what our topic is all about. Is it going into, more efficient hands in terms of choosing investments? But Tarun, before I come to that question again, the prime question of this debate, do you think we could be at an inflection point? After all, this $2,000 per capita income is seen as globally the level where people have had enough food and now they will start saving. So now we have crossed that $2,000 threshold. So do you think that you can make a very intelligent guess that we could see an improvement in savings?
You certainly could. I think a lot of this is also going to depend on some of the things I talked about in my 2017 report, which is the financial sector able to generate sufficient amounts of trust? I guess this is where there are some questions. Suppose we have a sudden market crash right now. To what extent is there some scarring effect that prevents people from, allocating savings to their most productive uses and so on? So there's a little bit of concern about that. But I would say, I think if I were to, not that I have a crystal ball available to me, but if I did, I would say let's wait and see what happens in 21, 22, and so on and so forth as the data comes through. And I would be a little bit surprised if the current declining trend continues. But
Yeah, Dr. Sen, similar question to you. I mean, historically, that over $2,000 per capita income is seen as a turning point, and we have crossed that number. Fertility rate is in our favor. We will be dividing it by a falling number to get a decent per capita income. Are these good arguments to believe that we could be improving our savings rate?
Well, the point is that all of these so-called tipping points have been based on historical experiences in other countries. And so one should moderate them a little bit. So when you're talking about figures of this kind, it usually presupposes a particular kind of income distribution. Now, in India, the evidence is that the income distribution is getting a lot worse. And it's much more so than in most other countries. Now, in a situation of that kind, yes, on one hand, you have our overall incomes going up, tipping past the $2,000 limit, which should give rise to greater sort of investment in market-based instruments. And the change in income distribution also suggests that something similar should be happening. So you have both factors working in the same direction.
Okay.
Right? So you should have seen an acceleration in the trend.
Okay.
But the point that Tarun was making, it's early days yet.
Yes, exactly. Actually, concluding thoughts from both of you. Tarun, the CRISIL report goes on to, even in retirement funds, they point out that in the last 5 years, the CAGR is 19%. And even if we assume a 20% growth, we will have about, 100 lakh crore over there in 2027. So are you convinced it's a tipping point? And what should policy do?
Yeah, I mean, I think, I agree with Dr. Sen that this time is different. It's a very appealing narrative that we're suddenly we're on the cusp of a rocket ship about to be launched. And I think in economics, things happen a little bit more slowly, and we should be thankful for that. I think it is true that we are seeing an increasing trend of financialization of savings. I think that is undisputed. Yes. And I think it is true that that will continue, which is all for the good. But I think there continues to be this query about whether the aggregate savings rate will decline and offset that trend. So I think I'm cautiously optimistic at this stage. I think it is true that we are witnessing a secular change, but I'm not quite sure that we are at an inflection point, if you see what I mean. I mean, if anything, the inflection point has already happened, and there has been a trend of financialization. We're kind of continuing to enjoy the benefits of that trend right now.
Okay. Dr. Sen, last thoughts. I mean, I don't have the time, but I was trying to include the fact that even tax to GDP seems to be improving.
Well, Lata, you do know, of course, that a very large chunk of what we call financial savings, financialized savings, are government bonds.
Yeah.
Right. So, the question, of course, is the shift that we are seeing in financialization, was that the outcome of the government overshooting its fiscal deficit targets and having to print more bonds, putting it out there? Remember, all the institutions which have a fiduciary responsibility will be investing at least 50% of their funds into government bonds.
Yes,
some of them do much more than that, right? So is it simply that it's not that the money is going to the most efficient uses, it may just be going to the government?
Oh, you're absolutely right, sir, because so much money with insurance, and they're offering, to counter the bank deposit interest rate fall, they're offering guaranteed return products, which are invested even in forward, hedged on government bonds. So I take your point that this could be all going back to the government. But I'm still pinning my hopes that there is a positive financialization, and this $2,000 plus per capita income could be a tipping point. I'm glad that both of you have put some caution on the table, but as Tarun says, cautiously optimistic. Thank you very much for joining me and giving me some nuanced understanding of the data we have. Wrap up on Indianomics. Thank you for watching.